Let's also try and connect with the management of Escorts to talk about that. But before we try and get the management of Escorts, let's just get in Hiral she has the report of Motilal Oswal, which is bullish on the company. What's driving the optimism, Hiral?
So if you see in terms of our Escorts is concerned, it has risen to more than a 5-year high, and we know that Motilal Oswal has rated it a new buy. Now shares are up by almost 15% to the highest since November 2010, and if you see the volumes as well, 10 times the 3-month average, and it has been the best performer in terms of our S&P BSE 500 is concerned, as well as on the Nifty small cap index. Now they have a target price of close to 283 rupees, and expectation of a normal monsoon in this financial year is likely to give out a rebound in terms of the tractor business, and initiatives such as introduction of new models including innovative anti-lift tractor to benefit the company as well. Additionally, what they're saying is that the tractor business, which is 80% of the revenue share, is likely to see a rebound, and sales CAGR of 14% over FY16 and 18 expectation is mainly on the back of strategic decisions that have been taken by the company over the past 2 years. Now the biggest beneficiary of normal monsoon in FY17 will be Escorts, and additionally they're expecting EBITDA margins to expand from 4.1% in FY16 to a 7.6% in FY18, and this will mainly be driven by initiatives to further lower raw material cost by around 80 basis points. Additionally, employee cost reduction as well by close to 260 basis points, and they are expecting approximately a 12% CAGR in terms of where volumes are concerned. And the value of the stock is at 10 times FY18 EPS, that is a 30% discount in terms of where M&M is concerned, which is again pretty strong in the tractor business. So all in all, a lot of positives that are emerging, and the major being the macroeconomics, which is turning in favor of all of these players which are big in terms of the rural as well as the monsoon play.
Right, so Escorts, one of the top performers on the street. Let's in fact connect with the management and get their perspective as well. Bharat Madan, he's the CFO at Escorts, joining us on the phone line. Morning, Bharat. Thank you for taking the time. A lot of optimism on the street around the stock of Escorts. From a company perspective, share us through the key developments that have been happening. Q4 was a strong quarter for the company. May sales were also up by about 10%. What's the outlook ahead for Escorts?
I think, as you said, the sentiments have been positive. So even the current month of June, which is supposed to be the peak month of the first quarter in this season, is looking pretty good to us. So I think the industry probably will deliver a similar growth what we have seen happening in the last 3 months, which is about 14-15%. And I think Escorts has given the growth in terms of about 10% with the northern market, which has not really been doing well, where we are the very strong player. So that impact will still be there, I think, in the market. But still, overall, I think the quarter will see good growth coming. 8-10% growth will be there for Q1 also for us. Overall, I think the sentiments for the year look pretty good. I think the monsoon is well spread out. We'll probably see a good growth happening in second half of this year. You could be anywhere to a positive surprise of 15-20% plus growth also. It could be possibility. But overall, I think for the full year, we expect it to be 10% plus growth now for the industry, given these scenarios.
Good morning, Bharat. This is Hiral on this side. Now, as you said that, the expectation of a good monsoon is expected to be a major beneficiary, and especially when it comes to the rural market as well. So, if you talk about the domestic market, you did give out a growth guidance of almost 10-12% in terms of our FY17 is concerned. So, if the monsoon is good, are we expecting any tweak in terms of our guidance is concerned for the tractor business in the domestic market?
So like I said, the growth today is pretty, it's not even, so a lot of unevenness is there in the growth pattern. So the southern market isn't going very high. 70-80% sort of growth is being seen in markets like Andhra Pradesh and Tamil Nadu. But the northern market like Punjab, UP, Haryana, they're still showing degrowth. So the degrowth level has come down from the high of 30-35%. Now they're down to single digit, for 5-8% sort of degrowth levels. But if the monsoon really happens good, probably in H2, we can see the northern market also doing well. And southern market, which is showing high growth because the high base rate, they may probably slightly taper down. So it will continue to grow, but probably at a lower rate. So that's why I think overall sentiment for Escorts, we still think, I think 10% growth is a good indication for this year. And overall, I think we'll still wait and watch how the monsoon really pans out and how the really H2 performs.
Additionally, if you see in terms of the margin front as well, we did see an improvement in the fourth quarter. And right now we have a Motilal Oswal which has come up with a report on Escorts, but they are expecting margins to expand from the range of 4% in FY16 to a 7.6% in FY18. Do you think this number of 7.8%, what analysts are estimating, is achievable?
Yes, we look at the cost initiative that the company had taken, so that also started being dividend. So you see the margin improvement happening, the material cost levels have come down because of this initiative, and you'll see the full impact of those initiatives being reflected in the profitability of the company in these 2 years, 17 and 18. And on top of that, the volume is also, growth is also happening, so that will also add to the bottom line, so the margin improvement. So I think we are very hopeful the margin improvement will be visible in these 2 years.
Right. Also, shed some color on your railways business. That's the new policy that's come in to boost railway connectivity in the country. Analysts are also bullish on your railway business. Any information that you can share with us on that?
Yeah, so that segment also we've been saying is going to do well. So I think we are looking at very positive signs in that segment, at least in the next 3-4 years. And the order book has really been doing well. Now we're already sitting on an order book of close to 95 crores as of 1st of June, which is the highest level I think we've seen in the last 8 or 10 years. So this is a very positive sign for us. I think we expect the railway business also this year will give us 15-20% growth, and that momentum will continue going forward also.
Additionally, if you talk about the non-tractor business, that's the agri business as well as the construction equipment business, how are they panning out? Because there has been a lot of pressure in terms of the construction equipment business, where over the last 2 quarters it was subdued volumes. When are we expecting that business to see a break even?
So in construction also, if you look at the numbers, I think after last 4 years of growth, Q4 we saw the growth coming into that sector, and the last 2 months have also given very positive signs of growth. Almost 50% plus growth is happening across all categories of this segment, so which is very positive sign. So we expect, I think this sector also will continue to do well, and we'll again see maybe 15-20% growth happening on the top line for construction equipment business also for this company. And I think the next 2 to 3 years leading to the election year in 2019, we expect, I think the years are good for the Escorts across all the segment industry is operating today. And the construction front particularly, we are hopeful probably will be able to reach break-even level in this year with the kind of growth we are looking at in the numbers.
Right. I mentioned at the start of the interview, the May sales were up by about 10%. We are almost at the end of June. How have sales been in the month of June?
I think the momentum is continuing, so we'll say I think June will probably see the similar growth happening. So 8 to 10% growth is likely in June also.
Lastly, before we let you go, if you could just give us your capex plans. You did guide for 120 crore capex over the next 2 years. How much of it are you expected to do in FY17, and are you going to use the funds to increase capacity, or will it be mainly in the R&D space?
So the capex for current year is basically going to be only product-led capex, or there are some statutory capex which we need to incur for business continuity purpose, like change of emission norms, which is underway. So I think on that we need to do some investment. So I think for the full year, our expectation for FY17 is about 80-85 crores sort of capex will be there. And for next year, I think we'll still need to figure out if the year really goes well. We'll probably increase the capex to a level of about 100-120 crores. But there will be no capex which will be incurred as of now on the capacity expansion across all the verticals. So railway, we can still see some sort of growth capex which will be incurred, but in the construction and tractor business, we have very good capacity which is available, and we don't need to incur any further capex for expansion there.
Right, and just a last question. You mentioned the emission norms. What is the kind of impact that you've seen because of these new emission norms? What's the kind of rejig that you've had to do to your portfolio?
No, as of now, the Euro 4 norms are not yet set into India, so that is still some time away. So we're still sitting on Euro 3 norms. So I think when those norms really come into play, obviously there will be some impact on the costs which will be there for the farmers, which will have to be passed on. So we're just waiting and keeping a watch when the deadline or the target for the emission norms really comes into play. But we are obviously getting ready for that.
Right, we'll leave it at that. That's Bharat Madan. He's the CFO of Escorts, talking to us about the plans for the company. They're looking at growth of about 8 to 10% for the year ahead, banking on a strong monsoon for the company. Railway orders that have hit a 15-year high, sitting at about 95 crores. So that's a big opportunity there. The stock itself is sitting at a 5-year high. up by about 12.5% in trade today, up over 71% on a one-year basis. We'll take a break here. Up ahead, get you the management of Zen Technologies. They've gotten a boost from the government.